Shitim Shari. Morning, Thursday, September 12th, 2024. But this video today should be fiery inferno. Instead of green paradise, Shidim Shari. Instead of green paradise, it is not. Let's focus on the mistake of the year. Well, this year so far as my trading, I would say the two biggest mistake has been Baidu and Elf. Every year they gotta be two or three. Okay, it's over the past couple of years I can't recall it, if anyone can trade or invest and say that they have not make a mistake or bought a bad investment ever in any one single year, you must be the best investor slash trader in the world. It happens. I've done this long enough that yeah, at the end of the day, no one like mistakes or bad investment. Okay, let's make it very clear. But you try to do the best you can, or I try to do the best I can with good fundamental and TA, and sometimes even that fail. Good. All right, let's take a look at this sector. This entire sector is under siege, and it is a micro level look at how bad the economy is, and we are there. Okay, so first of all, Elf, very good fundamental, but we are not in a growth. You heard in the big picture, right? You're talking, you hear a lot of people on TV, YouTube talk about growth versus value. In a non-recessionary environment, market will always focus on growth. PE, you hear that throughout a lot. Oh, PE of 30, 50, 100 is fine as long as there is growth. Okay, it's the narrative change once we have a recession looming or in a recession. For those that don't follow the market long enough, the S&P 500 as a whole can range from mid-teens to low 20-ish PE. Okay, you hear people talk about, oh, the S&P is cheap when it's like 15 PE collectively of all the component inside the S&P 500, or it can be in the low 20s. I think right now it is in the high teens, and throughout this year at one point it was in the 20s, and some people will defend it. It's cheap relatively to, whenever you hear people say it's cheap or expensive relatively to any time period, it is silly talk. It is cherry picking when they talk about it. The only thing that you should know is that if we are heading into a recession, there will be a shrinkage of PE. It is that simple. Back in 2008, 2009, if you want to look, the PE of the S&P 500 went down to single digit. That's what happened when you have a recession and fear. It doesn't matter if people think a PE of 17 is relatively cheap historically. It can go down to 9, okay? And back to Elf, that's the problem. Elf has been the big winner. And that's where I got it wrong, okay? There is no doubt that Elf is the growth, one of the very few growth company that have growth. higher earnings, higher sales. It did have growth or still have growth compared to other players in this sector. It does. But there is a shrinkage of PE. The PE of ELF, let me look real quick here. One of these days, I will learn to look at how I can look at some fundamental data on Thinkorswim because I have no idea. If you ask me to like look at find PE of ELF here, I'm like, I don't know how to do that. I have never even attempted. So maybe one of these days I should really look at how to use Thinkorswim completely. Okay, right now the PE, the yeah, the forward PE of ELF is 32. At one point in the last 3 to 4 months up here, it was in the 50s, mid 50s, high 50s. So right now, yeah. So let's remove the fundamental from the conversation. So yes, we have recessionary fear. You have double top. Okay, that's one of those ugly TA pattern. A double top tend to be way down, and it basically has retraced it. Okay, if you look at the TA pattern on a double top, okay, it has retraced it basically equal distance from this double top into the bottom. It has relentlessly been sold, tax loss selling, probably part of it too. As I discussed a few times here and there, tax loss for mutual funds, for those that don't understand, is the end of October's. Okay, so for us individual investors slash trader, we have until the end of the year to harness any loss position to offset gain, to not have to pay taxes. Okay, that's tax loss selling. We have until the end of December. The mutual funds, the hedge funds have until the end of October. Does that mean that they should wait until the last week of October to make a decision? No. If you have any brain, you sell now because likely more people will sell next week and next month, right? So it can happen now. It can start now. There is no reason to think that, oh, it takes loss. It's silly talk to think that tax loss only happen in the last weeks or days of October. No, it can happen anytime. But it intensify in October, okay? So back to ELF here. For the first time, we get a green candle. Can we find the bottom? Okay, so as TA-wise, it's ugly. I had some put spread that I rolled last week, and thankfully I closed those out for a loss and said, no, I smell trouble. Okay, I have shared as well, which I sold some, I got stopped out some, but I still have some. There will be time to buy more for the big gain. I do believe there is a big rip in ELF, not yet. There will be time that I will double down on ELF, on what I have, and ride it out, okay? But not right now. Right now, I think you have tax loss season that will, if the best case scenario for ELF right now is consolidate sideways and absorb the tax loss selling. If not, you can have a full retracement. How bad can it get? 88. Yeah, it can. That's a full retracement. Go all the way back to the start of the big move. Okay, so that's how bad it can be. There's a gap fill right here at 98. So if you want to be buying, that's potentially one spot I will buy if ELF slides slowly into, no doubt, the best thing you can do, set your stop. That's what I'm doing. Okay, I was waiting for this green candle to set a stop on the remaining share I have. Take a loss. It's okay. It's okay to take a loss. Okay, I can't stress enough. It is okay. You just have to find that bottom. If you have not um, set a stop, it's okay to set your stop at the low of day. Because look at this. You have basically, this could be the bottom. Whenever you see a double wick like this, where the wick is basically identical, they call it a tweezer for those that um, want to hear the term that TA use. Tweezer. Okay, you have a double wick, exactly the same level. Well, within pennies, not exactly, but when you see this, could be the bottom. All right, but set a stop right there at 108.23. The tweezer before that was 108.38. Okay, so it's basically 15 cents apart. But set a stop. Pick either one of those, because TA wise, that's the double tweezer that you looked at for. If that can't hold, then down, lower you go. Okay, that's it. Okay, so if this growth, if you talk about, we hear about catch up trade, like for a sector, like when a sector is doing well and a stock is lagging, there's catch up. There's no such thing as catch down, right? There's catch up, but the rest of this sector is ugly. So that's ELF. And then if you look at Estee Lauder, the high premium brand, can't get any lower. Okay, it's this is one of the ugliest looking chart. So as you can see, compared to ELF, which was a growth engine, obliterated. Estee Lauder, there is no growth here. Okay, look at the 3-year chart. It's just nasty. Okay, compared to ELF has been eating lunch. All right, so fundamental wise, yeah, technically ELF is just broken right now, but Estee Lauder has been broken for multiple years. You got, imagine, tax loss selling 2 October ago, nasty, and then there's a bounce. See that? There's a bounce. October, 200-ish, even below it, right? 193, 281. You see that? Almost $100, 90-something dollar move. That's 2 October ago. And then you got another year of tax loss bleeding. All the people that bought, my God. Well, guess what? What's the low of last October? See that? 113. No, what is it? 102. My bad. 102. And then you get as high as 159. 50% gain. So yes, there will be time. All right. If you lost money in ELF, I lost money on ELF, one of the few losers of the year. I'm fully confident that there will be an entry point between now and the end of October where I will recoup and make a lot more money than what I lost. Okay, I just have that confidence in the pattern and TA and analysis that I have, that it's okay. You can take an L right now. And as far as Estee Lauder, nah, nasty. Can it go sideways and bleed for the next few weeks? Yeah, there is. What's the catalyst? No, don't see it. And then the other player is COTY. Yeah. So yes, ELF catch up to the rest of the player in this sector. It is what it is. COTY is yeah. What can you say? 52-week low. Okay, so if you bought ELF and lose money on ELF, well, guess what? The entire sector is under siege. So let's take a look at COTY. Go back 3 years. Unlike Estee Lauder, right? COTY did okay. It was, but take a look at this. 2 October ago. Once again, tax. It was is this is an example of tax loss. Okay, no doubt for most of the year it was higher. Okay, and so you have tax in September. The tax loss started, and then by the end of October, this one bounced before it found the bottom. But look at this move from October 31st. My God, you could have buy COTY in the 6, and it's a double. And then you got the sell-off last October. Okay, the low was 9, and then you bought it, and right out into the new year, you could have got I would say 40% gain. It went from 9 to 13. Not bad, right? So yes, use the historical pattern of the past 2 years for your advantage. Last for this video, ULTA. Warren Buffett bought ULTA, gave everyone hope. Don't be surprised if Warren will hit on ULTA again and again and again. Okay, if he liked ULTA sometime down here, just like how he bought into Oxy and Bank of America over and over and over again, he might be doing the same thing here. So we'll see. I don't think the last buy or whatever initial purchase of ULTA by Warren Buffett is the first and only. It might be multiple, but this sector, look at last October. The previous year, not much, not so much. It did pull back, but that's the overall market, right? You have, September and October are bad months in the stock market, so there was a pullback. But as far as 2020, 2022, yeah, it was okay for ULTA. But last year, oh boy, you're talking, look at the bleed in September, all the way to the end of October. Okay, so that's what I'm saying. Tax loss selling can happen from September onward. In my days of working for the big man, the Putnam, and other investment firm, that's when the instruction go out. It's September. Get going. Search, screen for your loss, and harvest those loss if you think it's the right time to do so. So yeah, it happens in September. So you have that, and if you bought ULTA at the bottom, my God, okay, ULTA, the bottom was like 368-ish. Yeah, what a move. Forget about your holding for a long time, just until the end of the year. Just to the end, you get $120 move. It's 30% move in 2 months later. 30% move. Okay, so yeah, ULTA, ULTA can bounce around here for a while. Okay, to me, no doubt, ELF is the one to buy into the blood shed of tax loss selling this season. Okay, October. Just I will keep reminding people, October. There will be a point that buying ELF in October will get um, a big pop. How big of a pop? I don't know. Let's go back to ELF. One last look. Hey, if you buy ELF somewhere in this range, say, let's say 110. Let's pick a number, 110. Is it unthinkable to know that by Christmas you can get 150? I am not going to miss a chance to make 40% on this stock and recoup the blood. Okay, so yeah, it will happen. I might do even a call spread of some sort to leverage up, but so that's the play. I address the one big losers I have of the year, and maybe tomorrow I will address Baidu because it could be a similar play. We'll take a look at the charts on Baidu tomorrow. All right, people, out.